Nice to have your company. Let's talk bonds, particularly in the wake of the jobs numbers today. Surprise beat, as you know, with that headline unemployment rate falling. Jonathan Sheridan from FIIG is with us live. Jonathan, welcome. What was the positioning like just in the wake of that?
Yes, good afternoon, Carson. As you say, surprise beat on the jobs numbers. We saw the Australian bonds sell off pretty much immediately, but almost immediately again rally back. So I think the headline number was a surprise, and there was a knee-jerk reaction. And then, as the underlying figures were digested, there was a rally back. As I said, a bit of a realisation that participation wasn't so great, and also the full-time jobs number wasn't so great. So we're basically as we were before the announcement.
Yeah, just on the participation rate, is that being interpreted more as a discouragement equation, so fewer people registering, or simply the possibility that a lot of that could just be ageing population dynamics?
Yeah, I think you'd have to look into the underlying demographics of the numbers and look at the actual sample that was taken. But I think either way, fewer people in the economy looking for work is not necessarily a positive thing. If that happens to massage the headline number, so it looks more positive, then obviously it's the underlying piece of data that's more important.
Let's talk about this exciting issuance, just because it is the first on the docket for Sydney University. Just intrigued to see that it really rates on a par with the states themselves, or at least some of them.
That's right, yes. It's rated AA1 by Moody's, which is equivalent to a AA plus rating from S&P, which is better than all the states apart from New South Wales and Victoria. So it gives you an idea of the credit strength of Sydney University, which when you compare it to a state economy, I think that's fairly surprising. That being said, stable cash flows and huge history and all the rest of it that goes into a really good bond issuer.
What's the likelihood that that rating remains rock solid, given presumably the underlying rationale is the land bank and the reval on properties that would be expected from time to time? I mean, I'm just wondering what some of the key risks are.
Yeah, well, real property is obviously a good asset to have underlying a bond issue. I think also its stability of cash flow both now and in the future. It's certainly in New South Wales, it's probably, without being an expert in the field, it's the premier educational establishment, at least on a large scale in the state. So there's all sorts of potential for future revenues, and that's what they'd be looking at when they come to that rating as well. So, ratings are a mixture of can they pay the bond back and can they pay the interest, and the faith of the issuer. So obviously a lot of faith placed on Sydney Uni there by the ratings agencies.
And that spread, are you thinking we're at these levels rather? I mean, are you comfortable?
Yeah, definitely. I mean, like we said, it's up there with the state government ratings, and therefore presumably at the same level of risk. So 95 points over swap is about that good level. I mean, a 7-year bond at 495. It's not a fantastically high rate for those searching for yield, but pretty good at that credit rating.
Jonathan, always a pleasure.
Lovely. Thank you, Carson.
Jonathan Sheridan from FIIG.